And that sound means we are now live here on our YouTube channel. It's our halftime report. The daily show, we go through the markets one step at a time, looking at charts, talking news, economics, breaking down earnings, looking at potential trades. Do it one step at a time, top-down analysis style, so that you guys can better run your daily routine with more informed information. I got a full crew here today. We've got actually Cody back. Cody, how are you doing today, sir? I'll bring you in here first.
I'm doing fantastic. Glad to be back. Been a while.
Man. Yeah, obviously, as you kind of evolve into your role as a coach and all these kind of things here at Tackle Trading, and you take on more roles in different ways, you're not going to be here on the show every single day, but we love having you here whenever you're here. It's great to see your smiling face. Hopefully the markets are treating you well.
What they want, okay? When I got students, they're like, "Hey, love your teaching style. I got to see more of you." All right, fine, I'll be here. Got to give people what they want.
When are you ready for a challenge at Trade Masters? That's a better question because we had one last night.
He's next week.
I'm taking on Tyler next week. Let's do this.
So Tyler, you did win last night. Is that right? I have not gone through the recording as of yet. So.
Oh, yes. I did win by a freaking landslide. Dang it. It was great.
There was some rookie hazing going on last night. Tyler showed who's boss.
It happens.
He did good. Marquise did great. He was great.
Marquise did great, though.
Yeah. How are you, Tyler, by the way?
I'm good, Tim. I got my red day. A couple days late, but whatever. I got a down day. I'm liking it.
You finally got your red candle, yeah.
As long as that red candle is red by Friday, you're good, bro.
Listen, I'm not even going to go into the details on my mismanagement of this nonsense. Let's just move along.
Yes, but it worked out. So that's a good thing.
Well, here's the thing. I mean, it's a red day for sure, but we don't exactly have a pullback yet, do we, Matt? I mean, that is doji red candle. I don't know if I'd call that a pullback.
Depends on the index, I suppose you're looking at here. But when you're really kind of breaking down, I definitely want to get Tyler's take on this from a technical perspective. You are, and we were talking in the pre-production show about how, and we'll talk later in the halftime report about during earnings roundup as well, but something that's I've been noticing over the last couple of days, Tim, is a little bit different in this specific earnings season where I've said recently, these are numbers that typically get gobbled up in this market condition, and go pick your earnings performance today, and most likely it's down regardless of the performance, and so you do have some concern building in the short term in the marketplace, and I want to get Tyler's technical read on that, but as of right now, regardless of whatever's being reported out there, technically here, I still think you're in that high base type technical pattern in the broad market, whereas you have yet to violate the lower end of the channel in the high base. And so when you're looking at that, you really kind of have that. You got a couple weeks in the 3880 barrier, and if you'll drop that down into a 15-minute chart or a 30-minute chart, Tyler, you can kind of identify that lower end. And so in the high base, that lower end is in that 3890 to 3880 zone, and you can kind of see where that low point came in today. And so it has yet to break that lower end of the base. And so the pattern in the broad market, until that lower end is broken at 3880, that high base is still alive. And as long as that high base is still alive, you're still looking at it from a buyer's perspective, and you're still looking at that ultimate breakout. And so I do think you're in one of those moments in time where, if you do get another down day, it can blow up some degree of technical patterns. But again, even a down day in the market, you're still talking about buy the dip mentality of the 20-day moving average. So even though the concern is building a little bit, and technically we're a little concerned over the course of the last couple of days, I don't think anybody should be losing sleep over the price action in the market right now. Tyler, what are you seeing from a technical perspective?
I would say the same. I hadn't looked at the S&P yet today because I've been laser focused on small caps, but I think it does put things in perspective when you zoom out and you say, look, you big baby, we're at the low end of the range. We're not even close to the 20 MA yet.
Which is amazing.
It's noise.
Yeah, which is amazing given some of the media I've been consuming recently is a little bit of Chicken Little, right? A little bit of run for the hills to a certain extent, and yet we're in a high base technical pattern in a general bullish uptrend.
And you're like 2% off the highs.
Like,
Well, and the other thing too is it probably just depends on where you look, right? So the
Yeah.
S&P is maybe masking some of the damage going on beneath the surface. If you look at some of the momentum names, the high beta names, you are definitely seeing some unwinding in some of those more speculative areas. So
Yeah, but
that's the area to be
I
concerned
honestly think those areas have very little to do with the broad market, and I think they don't have that much to do with the broad market today. Walmart has more to do with the market today than anything else.
Yeah.
Right?
Well, and
So-
and it just goes to show that how you feel about this sell-off probably depends on what you're invested in right now.
It probably tells you exactly where you've been focusing your attention a little bit,
Yep.
no doubt about that. You know,
Yep.
when you're looking at IWM here, Tyler, we are seeing a little bit of a disconnect from a trend and a pattern versus the broad markets, whereas the NASDAQ, the S&P, and the Dow Jones, all in similar type general bullish, high base type technical patterns. Here on IWM, we were sitting here yesterday, Tyler, and we were looking at the recovery here. And, you know, I remember saying yesterday that, you know, as the buyer, you like that recovery, right? You like to see the defense, you like to see the strength, and that kept that high base type scenario, that high base breakout in line, right? Well, a day later, we're seeing something else. What are you seeing in the Russell 2000, the small and mid cap index, and does it change the technical philosophy that we were looking at from yesterday?
Yeah, a little bit. So the thing that I think is illustrated with this is you have to be adaptive. You have to be fluid. The market's not going to give you perfect patterns every time. If you try to live and die by your read on one candle, you're going to get frustrated a lot. So you have to be willing to change kind of your take, right? So to Matt's point, you came into yesterday with a high base, and yesterday did what the S&P has not done. It kind of broke below this little 5-bar base, which you say, okay, fine, a base is morphing into a pullback. Okay, give me a pullback then.
Yeah.
And you want more than one bar. Like the point here is if you're already in, you don't want a down day because you just want it to go up every day. But if you're not in yet, you're looking for a good pattern, a good opportunity to get in, and basing and then having one down day that breaks the low of the base and then pops right back up, that's not a clean setup. That you can't go read in Edwards and McGee technical analysis, 101, look for a stock in an uptrend with a 5-bar base and 1 bar that breaks below the low of the base. That's not a tradable setup.
BTFD is probably not in that textbook, right? You
need the updated, the updated version for that.
It took Tyler a second there, but he got there. Tyler, here's how I see it. Yesterday with the recovery, I stated once again, as a buyer, you like the price action you're seeing today, and it keeps that high base technical pattern alive.
Yeah.
And we saw that. We saw it close back up into that range, and that kept that high base breakout alive.
Yeah.
But as a trader, I actually like the price action today a little bit better.
Yeah.
And the reason I say that is, as a trader, you're looking for that clean entry. You're looking for that clean technical pattern. You're looking for the simplicity of it. You're not looking for hey, let's hammer candle, snap back, and hopefully we recover to hypothetically keep a 230 breakout alive.
Yeah.
That's not what you're hoping for. You want it if it happens, but you're not hoping for that. You want cleanliness in your technical patterns. And so when you see this down day here today, I actually see this as a trading opportunity, whereas yesterday I just saw that as it kept the high base pattern alive.
Yep.
And so now you're looking at this as standard bullish flag based patterns. You're seeing this now as a standard, the beginnings of a textbook bullish retracement. If it does manifest itself, we haven't seen those bullish retracements manifest themselves, but I think you're looking at this point a little bit of an easier technical scenario than you were looking at yesterday. And so when you're looking at it as a flag based pattern at this point and not a high base failed recovery, I think now you're looking at intraday analysis, and you're looking at those double bottoms on an intraday level, and you're looking for intraday resistance levels to break out of, versus just, oh my goodness, let's recover and just like let's just buy that next breakout again. I think it sets up the market for a better technical setup right now.
Yeah,
And specifically, Tyler, before you go, relative to IWM, because what we're seeing in the broad markets are just continuation of everything else we've been seeing in the last week.
Right. If you look since November, which November, that's like the beginning of this whole this phase, right? This phase of the bull
spawn
market.
point. My son would call it spawn point. That's spawn point for this phase. Yes.
There you go. That's right. You know what? Speaking of spawn points, I would love to die right here, Matt, and go back to the spawn point. Give me a redo, right?
Let's instead of just selling that out of the money call option on the bear call spread, let's just YOLO, baby.
Yes.
I get it. I get it.
So you look since then, and look, here's your dip to the 20, scare the children right back up. Here's your dip. And this is the thing. It's like, well, there's two ways you can react to this. One is you can say, okay, we're screwed. This is it. This is the end. This is the beginning of a massive correction. Yeah, maybe, but the odds don't favor that. And so if I get a repeat of these other two episodes, look, don't overthink it. Don't overthink it. I would not mind us closing near the low here. We don't have to puke 4%, but.
And let's talk about that, because there's a couple reasons why I don't think you would mind it closing towards the low point. Number one, there's multiple ways to trade the Russell 2000s, the IWM, and later on tonight, you're going to be doing a mastermind group for one of our systems called, which you're doing cash flow condors tonight, right?
Yep.
And cash flow condors is an iron condor system on the Russell 2000 that we like to employ bear calls, bull puts, iron condors on the index, because we don't believe the index moves as fast as individual components of the index do. And so if you want to learn more about that system on credit spreads and condors, go over there to the tackle trading and be a part of that, tackle trading mastermind group that is called cash flow condors. Those condors have not been great performers in the last couple months, given the fact that the Russell 2000 has finally been the leader of the marketplace, right? They were great as they lagged the market, but they haven't been great in the last couple months. But the last couple of days gave a little bit of a reprieve for those strike prices on those condors. So Tyler, the question I have for you is this: as somebody who invests in the small caps primarily, right? And not 100%, but that is a major focus of your investment, correct?
Mm-hmm.
Okay. And you also have a system you employ every single month called cash flow condors on that same index.
Mm-hmm.
When you see these types of bullish retracements, how do you mentally handle that in your portfolio?
Well, one of the benefits of having different strategies all at once in a portfolio is something's always working, and they often offset each other. And so it's like you have quite a bit of control over how much your account fluctuates based off how many trades you do, based on the types of trades. So one of the things you'll notice is on pullbacks like this, if you're 100% all bullish trades, there's nothing fun about the last 3 days, right?
No.
You're like, what's going on? It's broken. It's not going up every day. I don't like this, because I look across the board and all my bullish trades are getting hit. And that's fine. That's the price you pay for being long and strong. If you want to just have all bullish trades in a bull market, that's fine. But you cannot avoid taking a hit on these drops. You just can't. And so if you're interested in mixing it up a little bit and making it where maybe the highs aren't as high and the lows aren't as low, you diversify. And so maybe the condor is a trade where when we have this big advance right here, it didn't help, it hurt, but now it's helping, right? So like the last 3-4 days are maybe where your bear trades or your neutral trades kind of earn their keep, so to speak, because they're reducing the drawdown in your portfolio. So
I like it. And tonight, when you get into cash flow condors in that mastermind group with the team, with that specific team, what are you going to be covering here tonight? Just a little bit of a primer for what you're going to be covering tonight for cash flow.
Yeah, well, it's about time to put on the April condor. So typically what we do is we look out to the next month and we kind of build out the trade. We say, given the current market conditions, how would I apply the system right now? How far out of the money can we get? What are potential adjustments we might consider? So we basically just talked through how to manage the system given current market conditions.
Well, and what I like about that specifically here tonight, Tyler, is this is when you write the bull put side of that equation from a technical perspective, correct? I mean, when you're talking about the perfect opportunity to maximize your range on a system like cash flow condors is when you're sitting at support and you can have support fight for you where you can sell lower than what it would have been at the high. And so I love that. So you're going to be talking about the April contract and that system. Obviously, you know, we have some expirations coming up as well that I'm sure you're going to be navigating that as well. So definitely as a reminder, guys, get out there for cash flow condors. Join Tyler here tonight in that mastermind group. You know, Tyler, specifically on IWM, you mentioned that you would like it to close near the low. Can you kind of walk me through the why of that? Because most people, as they come to the market, they're like, please, please, for the love of all things holy, please go up, right? I mean, that's the mentality a little bit. You're talking about, hey, let's close towards the low here. Tell me why.
Well, because I know what comes next, or at least I think I know. I know what the odds suggest comes next. And so it's like playing chess. You're thinking a couple moves ahead, and it's like, what gets me in the best setup for the next swing?
You want another down day.
Yeah. So the ideal retracement is like a 3 to 5 bar retracement. When you look at the risk versus the reward, when you look at maybe getting a bump in implied volatility, it just lends itself to other opportunities. Plus, when I look at some of the areas that I'm interested in, that is leading sectors like financials, you're 1 bar into this, like one down day.
And one down day just comes and kisses off that gap. That's all that does.
Yeah. I mean, this is hardly even a dip. So when you look at the individual sectors, energy, I wouldn't mind doing something on. Really, they've held up well before today. Today's like the first down day. And so
can we take a look at a couple other sectors very quickly here, Ty? Take a look at communication. You know, one of the strongest areas of the market, if not the strongest area of the market post-election, and specifically ever since Netflix's earnings report. Tell me everybody couldn't handle another couple days of consolidation in this space right now. And you know what? If you get 3 days down in this space, that would be a massive, massive buying opportunity as that 20-day moving average gets tested for the first time in a momentum trend. You would love that. Take a look at the technology space. Who isn't getting excited for technology happening right now? Doji sitting at support, kissing off the previous resistance channel, coming into a 38% retracement on the Fibonacci. I had to do it, Tim. You were here. But it's coming into some, you know, I wouldn't say very strong, but the collective areas of support that they are coming into, it's like, okay, so you have these horizontal levels of support that everybody identifies, right? Literally everybody and their dog identifies that. You know, stockcats.com has their cat upwards, literally identifying it because it's that easy and everybody sees it. Things like, you know, you said yesterday, the longer the base, the higher in the space. Everybody sees those bases. Everybody sees them because they happen over an extended period of time. They get multiple hits, 200-day moving averages. They get hit multiple times. But when you're talking about a momentum trend like that is happening in communications and technology right now, you don't get a lot of those major areas of support that form because historically it hasn't touched these levels. You just haven't had the time to really impact that price point. But when you're looking at all these degrees of catalysts for support that can act as support, right? They are called technical catalysts. They're hypothetical levels that could form. You have previous pivots, you have moving averages, trend lines, you have Fibonacci's, you have significant whole numbers, you have price gaps, you have all these different things that can become support. And so when you're looking at a momentum trend like that, you're saying, okay, how strong is that 20-day moving average, right? It's just a random line on a random chart. Well, when you start stacking support levels, and what I mean by stacking is, okay, have you guys ever seen those old martial art movies where they stack the bricks and they chop the bricks, right?
Sure, yeah.
You put 1, it's easy, right? You stack 5, it's a little harder, right? Tim, don't act like you could break 5 bricks right now. Okay, but all I'm saying is that
behind my back?
Put one support level. Just go with me on my analogy, please. But if you just go with one support level, right, that's like putting one board down. You can break it fairly easy. But if you stack those support levels on top You have all these different traders that look at different things, that it becomes a stronger level of support. And so when I'm looking at that 20-day moving average, yeah, Coach Mark would be like, yeah, every algorithm in the history of mankind has always been programmed around the 9 and the 20-day moving average, right? And I said, okay, whatever. If you're right, you're right. If you're wrong, you're wrong. We're never going to prove that. I look at it and I say, well, you know what, Tyler, I love that old pivot point. Wow, I love that old pivot point. That's such a good pivot point, right? And then, you know, Cody, because he's a Fibonacci nerd, he'd be like, you know what, let's break that down on a 38% retracement. I love that 38% retracement. And, you know, Tim, because he can't, you know, read a Fibonacci, he's like, well, I like those colorful lines on that red line. That seems important. Like all these different traders out there, they're looking at different things and they're stacking support, and that strength and that support level, at least for me, in my crazy little mentality, I kind of like it. And it leads to me to believe in that support level a little bit more. How do you not like what's happening on technology right now? If you missed out on the run, this is what you've been waiting for. We say it every retracement. Don't get scared of media and headlines. Focus on the technicals. You got something setting up on technology right now. So I'm glad you went to the sectors, because all I wanted to do is talk about the retracement happening in technology today. That's it.
I see how you came around to that, Matt. Well played.
Thank you. I was patient on that one. I felt like I was Kevin Spacey in The Usual Suspects. I was very patient on that one.
He's got a few little quips today. He's on it.
Yeah.
I'm trying to remember some of the references he used on The Usual Suspects now. Like, anyway, I'm not going to go there.
Listen, we'll get to Monty Python later on today.
What is your quest?
What is?
None
shall pass.
The troll at the bridge. Fantastic. All right.
What is your name?
What is your quest? What is your favorite color?
Him.
Right?
Yeah. No, it's not.
You're wrong.
What is the average speed of a swallow?
Right. So Tyler.
Yeah.
Coming back down to the technical breakdowns, looking at the broad market here, S&P, Dow Jones, and specifically those two indexes, high bases. Let's see how they navigate.
Yep.
I'm looking at the NASDAQ right now as how it's going to navigate that 20-day moving average, and I think that the sector looks a little better than the index from a technical perspective. But let's see how that navigates. Russell 2000 starting to form a little bit of a bullish flag. Let's see how that intraday handles over the next couple of days. What are you seeing in crude oil here today, Tyler, from a technical perspective? Can you and honestly, if it's just overextended, needs a reprieve, let's move on very quickly.
He asked me the question, then he answers it, so let's move on. What, do you want me to add insight to this? I mean, yes, it's overextended. It needs
sometimes I just want to make sure we're all clear on how long we need to take on something.
Yes, we got it. Okay. Down bar. By the way, this is also why you wouldn't mind having a couple of down days. The energy has been helping the Russell 2000 index. So this is an area you want to buy a dip. So give me a dip. Don't give me one bar. Give me three. You know,
three.
You might not get this one on crude. We might get a time consolidation, something like that. You know, last time we needed a price or time correction, we got it time wise. In fact, last two times. So who knows? I mean, maybe we do.
Don't muddy my request. Okay, I asked for 3 down days.
I got you.
I think it's a tough tactical read right now. And the reason I say that is that little hesitation candle at 57 to 59.
Yeah.
That little hesitation range, I think it throws it off a little bit, and I have a difficult time reading that because at this point I just feel it's just parabolic and overextended, and it's acting like it's GameStop, and it's one of the largest commodities in the world history.
It's impressive.
It's ridiculously impressive.
Yeah. Sure is.
Yeah.
All right, let's flash through all the commodities, by the way.
I do have a question though on this. Let's say worst case scenario, we are looking at consolidation, because I don't think if crude goes down to 55 in the next week, we would all be surprised, correct?
I would be surprised if it's
that aggressive. Yes.
Yeah. Yes. That aggressive. Yes. So let's say worst case scenario is consolidation, slight bullish retracement, something along those lines because of the overextended nature. If it does form that bullish retracement, do you think it would impact the sector itself, or do you think the strength of the sector would maintain?
Well, I think you're going to have I think the sector would come down. I don't think it'll break trend, but yeah, I think you get a pullback. And I think you want one. Oh, why wouldn't you want one?
Yeah, I think you want one.
Yeah. Again,
Yeah, I
every
think
dip since the spawn point has been a buy. So I don't want to overthink this.
and the next one should be as well, unless otherwise we see something different, correct?
Yeah, and that's the thing is
Yeah.
I'm making a little presumptuous here, but let's see how it forms when it comes here. But a pattern's a pattern, a trend's a trend, and
Yeah.
you don't want to live your life picking tops and picking bottoms. You just want to go with the flow and assume the trend continues until you get sufficient evidence to the contrary. So until we get that, we're all in dip buying mode here.
All right, and the last two questions I have on commodities very quickly. Gold, do you see anything changing? I like it's a doji at support.
No, I don't see any changes.
I don't want to stop you if you had a very, very detailed answer here on gold.
I got it. No, I actually did a bear play in gold miners on Trademasters last night. So, yeah, I think until the narrative changes and until you see something different in the price action, even if it did bounce a little bit, it ain't going to cut it. You need a trend reversal at this point. So, yeah for now,
and
rallies are suspect.
Those trend reversals start on the daily, but what you're really looking at is on the weekly, which means you need time here.
Yeah, you need time for sure.
You need time. Silver. Let's take a quick peek at silver, Tyler. Silver has been holding up quite impressively against what has been happening in the gold market and some of the other metals markets. Silver, we talked about on that dip following a week and a half ago when Reddit thought they were going to take over the silver world.
Yep.
We all saw that as a potential buying opportunity. I know a lot of people did make that trade, and a lot of people are already in silver to some extent. Do you see anything changing from that breakdown that you and I were doing over the last week and a half?
No, I do think one of the things we had emphasized was cash flow versus directional. I think I was on the cash flow side. When you get this strong of a pullback, this is one of the reasons why when I get a big strong dip with some decent volume, I'm more inclined to do like a naked put or a covered call versus an aggressive directional play, because there's like a hangover effect when you get a deep aggressive retracement versus a shallow mild retracement. Kind of like the same thing here, right? Pretty aggressive pullback. It takes time to get back up. And so this right here playing out obviously has favored cash flow over directional because it's just kind of taking a nap.
For people, and I heard some stack on my end. If you guys share any stack, just cut me off very quickly, please.
No, we didn't hear it, so you're good.
Yeah, but if you do, just tell me to shut up and take over. With that consolidation in the last week and a half, do you feel the trigger above 28 is still alive and well? Better? Where do you see that trigger at 28?
I think it increases the significance. Again, the more times you hit a level, I think we said this yesterday, the more times you hit a level, the more significant it becomes, the more eyeballs are on it. And as I said yesterday, I mean, if there's a seller sitting up there, you just picture there's a finite amount of supply in this area. Once you chew through it all, the assumption is you go higher. So yeah, I think the longer you rest here, the more significant the eventual breakout of 28 becomes.
Awesome. Well, Tyler, go ahead.
One other thing. Do you think silver's saving grace right here, because it's doing way better than gold? Do you think the saving grace on silver is the fact that it's more speculative, that it's a little bit higher beta? Do you think that people are like, screw you, gold, you're so old and boring, but silver, I don't know. I mean, you got some pep in your step. Maybe we'll stick with you.
I think there's some heated debate on the inflationary argument relative to how it will impact gold. There's some macro events happening in the gold area that would not impact silver, such as, countries that are not G7, G20 type countries liquidating physical gold positions to offset additional healthcare costs that silver does not have. Silver doesn't have that at all. I think silver is performing in the industrial as an industrial metal with some hope towards an infrastructure bill, which would be both physical and digital, which would both help platinum, palladium, and silver, and it would not have an impact on gold. So I do think you're seeing a little bit of disconnect on the gold and the precious metal side from a macro perspective with gold liquidation. And like I said, that interview I did with Pete Thomas a week and a half ago really opened my eyes to some of those macro concerns that's happening in the gold side. Silver, it's got that industrial shine to it, and the industrial shine is it's pretty clean right now.
And so isn't it interesting that even if you didn't know any of that, the chart told you silver was better than gold
the chart
anyways?
told you everything.
Yeah.
I mean, that's why we all love technical analysis. I mean,
Yeah.
don't get me wrong. I love causation and I love understanding the macro themes, but that's as much of a personal interest in my life as it is
Yeah.
helps me navigate the financial world. I mean, everything you needed to actually know, the price of gold versus the price, or the chart on gold versus the price on silver tells you that story.
Yeah.
I do think the understanding of the detail helps the confidence in navigating the market.
Yeah.
At least for me it does.
Yeah, I totally agree. I had forgotten the industrial thing. This is more economically sensitive. The whole reopening play that's moving in this favor. But yeah, fascinating. All right, what's next?
Yeah. Let's take. Well, I was going to give you a moment. I was going to do a whole little like transition. I was going to Tim. I was going to like even subscribe and like, and if I was going to do all that, and I was going to do a 30-second pitch on Tackle Trading Pro. But you know what, Tyler, you just ruined it all. And because of that, no, I kid. I'm going to throw it to you on Trade Masters, Tyler. We had a great show on Trade Masters last night. Marquise Johnson, up-and-comer tackle trading coach over there, has been writing our newsletter over there at Tackle Trading for the last couple of years. We love old Marquise, but he is in that. He's a noob. Like from a Trade Masters perspective, right? And Tyler, for people that don't know what a noob is, please take 5 minutes to describe what a noob is.
5 minutes. I want to see if noob is a ticker symbol. Actually, you got me thinking here.
Noob.
It is not. It is not a ticker
it should
symbol.
be. It should be. It should be GameStop. I'm sorry, I had to.
A noob is either an endearing term for a newcomer.
It is always endearing.
It's a lovable term. Or if you are the newcomer, you call it a derogatory term. But usually it's, if somebody sucks or something on your team, he's the noob.
He's the noob. So Marquise is the noob. But no, I kid. Marquise, up and comer here at Tackle Trading. He was excited to take on the champ there in Tyler. How did you think Marquise did last night, Tyler?
He did good. I liked his jokes a lot, actually. Yeah, his jokes were great. And he had some really good picks. I liked every one of them, actually.
Awesome,
so he did
awesome. What was your winning pick, Tyler? In your opinion.
Yeah, I saved the best.
Zoom last week. You complained about Zoom for like 9 straight days.
Well, we'll look. When I stumble upon one that I'm right on, I gotta milk it when I can.
Listen, I totally understand.
I will show you the winning pick. It was the biotech that I teased yesterday.
Nice.
Keep in mind that when the market gaps lower and trades lower, anybody who mentions a swing trade the day prior, it's a tricky environment, right? And so if we had woken up today and the market was ripping.
You don't want to bring it up and brag about it on the day after the market goes down. No.
Yeah, right. Well, but this is the reality of the situation, right? I mean, you just don't know what the next day is going to hold. And so you have to kind of this brings up a bigger point, which is sometimes you'll get people that start trading and they struggle and they just don't realize that it's not them, it's the market. And you have to kind of separate between the two because the market overrides like everything.
Can I go on that point real quick, Tyler? Come back to the ES very quickly.
Yeah.
Guys, let's say some random individual was sitting last night scanning the markets, found a great bullish trade with a great bullish pattern and all of that, right? Perfect textbook master trader type setup, right?
Yeah.
Well, the future is going to play out. And the future is where uncertainty lives and variables live and the random things that can come up and get you, right?
Yeah.
Well, if you look at a 5-minute report here on the S&P 500, or not a report, but a 5-minute time frame here, and go to 6:30 a.m. your time. 6:30. Okay, you see that candle violating that 3,900 support level?
Yeah.
That was an economic report that came out called Initial Claims. And initial claims has not been that important recently, and nor do I believe it's important today. But it did have an impact on the market today. The market was trying to fight for intraday support on the overnight action that was selling off. Nothing aggressive, nothing concerning. It was just fighting for intraday support, something that happens every day, all day long, right?
Mm-hmm.
An economic report comes out, it misses the expectation, triggers a sell-off, violates support, stop losses underneath support, creates a volatile event. You can't project that setting anywhere around the world, doing anything any of the 8 billion people were doing yesterday at 7 p.m. Eastern Standard Time.
Yeah.
Those are variables that play out over time. And as a trader over the long haul, those variables are going to even out. That's why having an edge in your trading is vitally important. Nothing is 100%. You do not know how the market is going to react to an economic report that it has put zero importance to in any capacity for 6 consecutive months. And today you just had an environment created where the concern in the market has been building in the last week. And on the overnight action, you had a sell-off coming into short-term support on an intraday perspective, and the market simply used the event as a way to trigger a sell-off.
Yeah.
And these things just happen. They're part of this business. And so you can't project that yesterday. You got to react to it today.
Yeah. Well, and
So-
the other thing I would add is just to give yourself a break, you know, and understanding that we're all in the same boat with respect to the market's going to do what it's going to do.
Yeah.
And so that's why you can't really draw. I just don't want people to draw the wrong conclusion, you know, like, well, you know, you had perfect setups yesterday, but today they all sucked. Well, no crap, everything sucks.
Yeah, it's down. But again, you come back to IWM. I liked IWM more today than I did yesterday.
Right.
And if you give me a slowing momentum candle kissing off the 20-day moving average, similar to what you did last time in the pullback, and the time before that you did in the pullback, and the time before that you did in the pullback, I think it's going to be a wonderful buying opportunity instead of just the snapback recovery and everybody hates the momentum.
Right.
So it's all about the perspective, I assume. But I do want to turn over. I just wanted to talk a little bit about Trade Masters. And obviously, guys, if you have not had a chance to witness Marquis' first appearance on Trade Masters, take on the champ of Tyler, go ahead and check that out. We put it on our YouTube channel every Wednesday, 7 p.m. Eastern Standard Time. So you can definitely check out the recording over there as well. Tim, I want to quickly move into earnings roundup, and there's a couple of these I want to take a technical breakdown, but I do have quite a bit, so I'm going to rapid fire a little bit here, Tyler.
Let's do it. There's not much going
first,
on.
You know what? Let's first start with Walmart here. Actually, I don't want to start with Walmart. I want to start with Baidu because I want to get your technical breakdown on Walmart, Tyler, a little bit more in depth there. Baidu too, obviously, but this is more like a bullish retracement, and I think it's something that could get gobbled up, whereas Walmart's like, maybe it doesn't die.
Mm-hmm.
So a little bit of a different analysis there. Baidu here comes out, reports pretty strong EPS numbers at $3.08 a share versus the expectation of $2.62. Revenue $4.6 billion, both beats. Revenue did increase 11.8% year over year, which is fine. Nothing really to kind of get excited about. They did increase revenue guidance by the trick. They were 370 by 4. They came in at 4 by 4.3, and so they did slightly increase revenue guidance. Just from an overall takeaway perspective, Tyler, not a bad report, just kind of a slightly above average for here for Baidu. But to me, the price action is profit taking. That's the mentality. It's nothing. Oh my goodness, look at the headwinds coming down at us. Oh my goodness, have you heard about the supply problems? Oh my goodness, we can't justify the 112% we've done in the quarter. It's not that. It's just we didn't blow it out of the water. Let's lock in some profit here, right? Technically here, I kind of like the beginnings of what is happening. Tyler, give me a breakdown here on Baidu from a technical perspective.
Well, if you look at the last earnings announcement, it was at $150. It came into this earnings announcement at $325. In one quarter, the stock doubled. All else being equal, earnings could have doubled, not since last year, but since last quarter. And effectively, you could argue from a PE perspective, it was priced in. So this thing was red hot going into the announcement.
Mm-hmm.
This is the type of situation where Matt and I would say, if this gapped up, probably would have gotten sold.
Well, we hate, and we would have hated the technical setup, guaranteed.
That's right. That's right. So it had room to drop. And this is also where you can't just look at today's day and say what a dog. You have to look at where it's been and where it's come from. You wanted this, yes, I like it. This is like IWM, right? Give me another down bar. 20 MAs coming up. One of the hottest stocks in the market. This is good. I would like it to close at the low. Don't give me some hammer in the next 3 hours, please. Just
Call me
let
crazy,
it be.
but I want 275. I give me a standard 38% bullish retracement. By the way, that is going to happen more in the halftime report, I guarantee you. But give me your standard bullish retracement setup where it comes back down into a rising 20 and give you the same technical read that you had last time, and let's reset the trend and pattern.
Mm-hmm.
Yep.
All right.
There's so much juice behind
Go
the
ahead,
stock,
T.
by the way. I got to give you guys my perspective real quick. I so want to participate. It's amazing how perspective is. If you were in the stock, you wanted to ramp all the time, like Tyler said about the market earlier, right? But I'm not in the stock, and I was like, okay, good pullback. Let's get a pullback going. Yeah, 275 would be great. 270 would be great. Anywhere where you're having some kind of technical catalyst coming back in, give me a doji, give me a setup. And now this one's on my short-term watch list. So I like the gap.
And with the momentum, I mean, the zone of support that could come into is quite significant as well. Whereas when we were talking about, those stacking those support levels earlier, well, when you have this type of momentum, I mean, anything from Mark's girlfriend all the way down to the previous pivot at 260, that's going to be fine. I don't know where Mark's girlfriend is at the time, but I'm willing to bet it's north of 280, like 285-ish. Let me see.
Let's see how good you did.
290, I'm sorry. But anywhere in that zone between the rising 20 and the 9, that could act as a support. The previous pivot at 260, north of 260, could act as a support level. Anything underneath the 20-day, I do think you have to be a little bit more concerned about, though. Like, I
want a deep pullback.
I don't think you want deep here. Like,
I don't want a deep.
You
pullback.
want like Ty, give me a Fibonacci retracement, please.
Oh man, I'd love to. Let's do this.
Please give me I just need this in my life right now.
I'm gonna have to just give me 1 sec.
See, he doesn't even know how to draw them.
Oh, shut the front door. I use this for something else.
Ty, do you want me to share my screen real quick?
Oh, please share your screen. All right.
There you go.
Okay, here you go.
I kid. Okay, so you want Goldilocks here. That's what you want. You want Goldilocks, but you definitely want north of 61.8. That pivot point to me is important. So,
agreed.
Yeah.
Gotcha. All right, very good on Baidu. What's next?
All right, Twilio, TWLO here. All right. Twilio, another high-flying stock, had a very, very impressive quarter. Very good trend, obviously, coming into it. And at the high price, a lot of these stocks have been front-run. And, we a little bit of a rare occurrence today in earnings roundup. Most of the market gapped down today. Twilio here, kind of doing a little bit of the opposite approach from an earnings perspective. Gap up. And honestly, if it wasn't more just dark clouds hovering the market right now, I do think Twilio runs here today. So it's going to be interesting if we can get a little bit of I know we call every snapback retracement that kisses off a previous resistance, and we're hoping it becomes new support, the Cody special. But let's kind of see if the Cody special sets up here on it from a technical perspective. Intraday, I would like to get your intraday read here on that to see if we can see if that is starting to form here. Raw numbers here, though, very first. 4 cents a share versus the expectation of a negative 5 cents, so really good beat on EPS numbers. Revenue came in above the expectation by about 20%. Good, healthy beat on revenue numbers, came in at 548 million versus the expectation of 454. That resulted in a 65.6% increase in revenue year over year. And Tim, they triple whammied this. They increased guidance as well. So a good beat on EPS. Was supposed to show a loss, showed a profit, That's really good. Disney did that trick earlier this quarter as well. Showed a good, healthy beat on revenue numbers and an increase in guidance. This is a hot space and a great report coming out of Twilio here today. Tyler, intraday, do we have the Cody special setting up here?
It's messy, man. It's pretty messy. But that said,
Cody's always clean. Cody special has to be clean.
It does.
That said, they're fighting. So what Matt's talking about is this 440 is your resistance zone before today's breakout. It broke above 440. The assumption then is old resistance becomes potentially new support. So in an ideal scenario, you would hold above that old ceiling. It would become new support. And despite the messiness, so far, Matt, it hasn't broken down. What you'd want to see more than just a cluster of lows, though, is the 5-minute trend turn higher. So I think at this point, this thing's got to reclaim 450.
I think we need a day. Like let's see how 440 handles. Let's see how 450 handles. Let's see if it can set up a little bit more constructive. And I think a lot of it has to do with that cash open being very volatile.
Yep.
You're right. It's through that. Yeah, I don't think we can just say, yeah, let's discount that wick on this one. Like there's just too much action up there throughout the day. So I'd like to give it another day, see how but it should be on people's radar. They did great on EPS, did great on revenue, increased forward guidance, added 13,000 new active accounts versus 8,000 in the third quarter. I think this is a pretty decent report coming out today. Let's move on to Tilray. Tilray comes out, loses 8 cents a share versus expectation of 14 cents. Revenue comes in at expectation. Revenue did increase 20.5%. The only reason I wanted to bring up Tilray was it came out, it had an earnings report. It's been a hot area of the market, and just wanted to make sure people knew the numbers. Fundamentally, I don't have an opinion of anything in this area of the market. They're completely disconnected from any semblance of any degree of reality. So technically, though, that's how these trade. What are you seeing here?
Well, so the whole pot stock mania has unwound a little bit, and
kind of reminds me of GameStop mania a little bit.
Yes.
And I'm talking technically here, right?
Yes. Yeah. And so, everybody jumps on, everybody leaves, and then it goes back to being gold. It's got no momentum. So if you are hoping this thing reclaims the magic, you got to wait for some kind of break over the last 5 bars. Even then, I'm not super excited, but that at a minimum, I would need something like that to get me involved here.
Yeah, I think that's the minimum there as well, and I also think you got to be aggressive on the triggers.
Yeah, don't let it. I don't know. I mean, it's just dangerous if you're in after a massive update or something. It's just too hard.
No, I like a standard, very conservative OCO bracket order where if it dings between 10 cents, you're in the trade. If not, who cares about it? That's what I'm talking about.
Gotcha.
But yeah, I just wanted to get your technical read there. Let's go to SNPS very quickly. SNPS comes out with earnings EPS numbers of $1.52 versus expectation $1.47. Revenue came in slightly north of expectation, $970 million. I about said billion. What was like? Are we looking at Apple? Like no. 970 million. Revenue increased 16.3% year over year. They also reaffirmed guidance. Again, this is not a bad report. We got a beat and a beat that usually does maintain. Reaffirmed guidance was fine. There's not a lot of headwinds we need to be worried about. I think this got caught up in the market a little bit, and we should be looking at this as a bullish retracement with need a doji analysis. Ty, can you just take a moment to kind of explain what need a doji means?
Yeah, when you look at today's candlestick, it gapped down and it went down the rest of the day. It's trading at the low of the day. So we're big on confirmation. You don't buy because something is, buy the dip. It's like, okay, I'm going to buy the dip, but it started dipping 3 days ago. If you bought the dip 3 days ago, Matt, you're in a world of hurt here.
Yeah.
So timing matters. The devil's in the details. You can't just say, hey, I'll buy the dip. Well, you could just guess that it's going to be a 3-bar pullback and go up tomorrow, but you want confirmation. If you want to go north, I don't want to jump on a southbound train. I want confirmation that it's turned around and it's moving in the right direction. The assumption is that you're going to lose less if you do that, right? That it's just a best practice to wait for a turnaround. So what kind of indication would tell you, buyers are returning to synopsis and it's finding a bottom? Well, not a bar that starts at the high that then goes down all day long. I mean, that just screams one-sided, bearish, selling pressure all day long. You need some indication. Let's say we close right here. Tomorrow, I don't want another big red bar like this because it just means it's more of the same. I need a change in character. And so a doji, it's one of these little crosses, is a very small range. We dropped a lot today. We move a little tomorrow. It's a neutral candle. So you go bear candle, bear candle, bear candle, neutral candle. That's a change. And that would potentially portend or precipitate a reversal higher, and so it also lends itself to a quick entry, because if you're going to buy above today's high, that's pretty far away. You get a narrow bar, you use that bar's high, and you get a pretty quick entry.
And I also think it's important to point out on synopsis here that doji needs to happen tomorrow, and it can't have another down day. Whereas if you're looking at Baidu right now, you're like, give me another down day. I would welcome another down day. But because of where you're at in relationship to support, I think it's important on synopsis that we get that doji, because if you don't, you get another big red day. You're talking about something completely different at the 50-day moving average than you are at the 20-day moving average. So, that importance on that doji, I think, is more important on synopsis. And if you get a doji on Baidu right now, it's fine. You trade that, right? There's nothing wrong with that. You just trade it like momentum, versus here you would trade like a standard bullish retracement.
Yeah, 100%. So if you are sitting at support already, it's like, hey, bulls, I'm ready. Like, let's do this. Where you guys at? Where you been?
Stop the selling, bulls.
Yes.
Stop the selling.
Yeah. So yes, 100% agree.
All right, let's move on to SunPower very quickly. SPWR for those following at home. SunPower here, we've had a little bit of a shifting philosophy here over the last couple weeks in the solar area. The momentum, the shine is coming off and the rust is showing a little bit. Like, we've been around solar before, right? We've seen this song and dance before. It can fly, but when it's done, it doesn't take a long time telling you it's done. It's not a gut shot. It's just, guys, I'm tired. I'm going to go take a nap. Right. And we might see that happening here. I do want to get your technical breakdown from a daily and a weekly perspective on SunPower. And I want to take a quick peek very quickly at some of the other areas of this space, Tyler. And honestly, the concern here on SunPower and the reason SunPower is down healthy on the day here today is their earnings report was okay, but it wasn't anything great. And it definitely doesn't justify the price appreciation SunPower's had in the last quarter. There's absolutely no doubt about that. They showed an EPS beat, a pretty decent EPS beat, actually, 11 cents versus the 6 cents expectation. Revenue came into 341 versus 355 million. That did lead to a negative 43.4% contraction on revenue, which is concerning, obviously, after this type of appreciation. But it's really the lowered revenue guidance. They lowered their net 2021 revenue guidance as well. Apparently, we're not all going to be using solar power by the end of 2021, but and obviously there might be some of this whole caught up in what's happening this week from a weather perspective as well. Tyler, this is not a great report and certainly does not justify the previous quarter's performance, and I completely understand the sell side here, but my question to you is your concern building in this space, not just from a technical perspective on SunPower? Take a moment to break this down technically on SunPower, and then let's take a quick peek at some of SunPower's rivals.
Yeah, the one thing that sticks out to me on this is earnings was the catalyst that killed the momentum in this case. Yeah. And that is why it's dangerous if you're in one of these momentum stocks that went up 300% in the past quarter on hype right? Expectation of Biden presidency and all the good things that could come to solar.
Yeah.
It's like, okay, well, it's got an earnings announcement tomorrow. Are they gonna say good enough things to justify this big move? If not, this is like the situation where you have high multiple stocks that are way overvalued. There's more fluff. There's more unwind if they disappoint. And it's not to say that the long-term necessarily thesis is dead, but look, what do you expect? It went up a gajillion% in the last quarter, and it hasn't really made all the hype and the potential future earnings has not made its way to their bottom line yet. So, so you get back and you're feeling. The hard part for me, Matt, if I was in this, is now you have like this test of faith where it's like, okay, I've been confident with solar stocks because they've been paying me so much. This is the first time we've broken a pivot low on a daily chart. It's a pretty significant down day. This has got to be a little nerve-wracking if you got in solar in the last couple of months for a long-term play, hoping earnings wasn't that bad, and now you're like, well, okay, it's down 15%.
Yeah.
What do I do? I don't like being in situations like this. I think this is a tricky discussion if you're that type of trader.
Yeah, and sometimes you got to recognize when the growth's done. And again, anything can transpire in the future, and I am certainly bullish on solar, especially during the next 2-year phase of the Biden presidency, to see what they do in that capacity. But you got to recognize when the short-term growth is done. Right.
Yeah.
I mean, we got a lot of this already priced into this type of movement. And so and it's not just the concern here on SunPower from an earnings perspective. I've been seeing this in some of their other, this space's earnings reports. There hasn't been a rock star that just stood out. When you look at technically here, SunPower, a lower level of resistance, now violating support. That is bearish indicators, right? And I don't care about your magical blue line in those environments. Those things can get utterly just destroyed in volatile conditions, right? When you take a look at some of the other stocks in this space, Tackle 25, CSIQ. CSIQ, a really, one of the better fundamentally driven companies in this space. But now you're a double top, double bottom, and you're fighting for a major support level right north of $50. And if 50 gets clipped, 40's not out of the woodworks there. You gotta be concerned about that. When you look at Run, are you in? A very, very, very popular trading stock in this space. This thing's been over from the failed bullish retracement 4 weeks ago, and finally people are starting to realize that run, with all pun intended, is over.
Yeah,
it just was. You got to recognize when the growth side of the equation is done, and you need to start writing calls against those. Because to me, CSIQ is not a trade. It's not. People should treat it as an investment, as a cash flow opportunity. And so when you invest, you're never going to get out simply because you think something can go down 20% more to $40. Like, you're not going to get out of that as an investment. So what are you going to do? Are you going to duck your head in the sand and pretend like the monster's not there? Are you going to duck your head in the sand and act like you didn't just clip the 50-day moving average? Are you going to duck your head in the sand and act like earnings hasn't been piss poor in this entire space? Are you going to duck your head in the sand and hope Reddit saves your day? Or are you simply going to do your job and write covered calls to offset the loss and make a decision whether or not you need to call it a trade? You need to be able to recognize that.
Yeah.
And right now that is happening in this space. I don't care what anybody hopes, wishes, and wants and desires are. The market is king, queen, and country here. And so to me, the growth area, the concern is building here. And there's no buy the dip here. We got double tops and double bottoms and violations of support. This is right against cash flow to offset loss. And then let's wait for dip mechanics to form from a technical perspective so we can reignite it.
Mm-hmm.
That's how I see it.
This is a good example to what we said earlier, where the S&P is masking some of the damage going on beneath the surface in some of these momentum names.
And solar would certainly be that, Ty.
100%. And so it's like, well, Yeah, the bloom is off the rose. I mean, this hot momentum area, you're seeing quite a bit of damage, but the S&P is like, whatever. I mean, I mean, it's not bothering it at all. Yeah, it's tough, and I think it's hard too, Matt, because it's like this area has loved you for 6-7 months and just been killer, and when the party's over, it's like
46 dates and they all went great.
Yeah.
Last night you got in a wreck and you ended up at the hospital.
Yeah.
Right, and then you had to meet mom. It was a double whammy. What are you supposed to do?
Oh, I got it. I see what you did there. That was good. That was good.
Thank you.
Mom ain't happy, right? She's not happy.
No, first time you met mom too. I mean, I'm not saying that's a real story, guys. I just made that up. Like,
not the way you want to meet the parents.
No, that's not. There's a lot of ways you want to meet the parents. That's not one of them.
I want to shake the dad's hand and look him in the eye and tell the mother how amazing she is. That's what I want to do. I don't want to meet him at the hospital. Hey, I'm sorry, I got your daughter in a wreck. Like, it's okay though.
All right, Matt, I also think we had a couple other earnings we want to look at as well. Walmart, did we get to?
I love that, Tim, getting me off that. I love that. Yeah, let's take a quick peek at Walmart here. WMT. Walmart here, fight is coming up, Tyler. Fight at that 200-day moving average, and quite frankly, rightly so. And again, this is not one of those scenarios where you got to justify the price performance. Walmart's done nothing in the quarter. I mean, Walmart's just been hanging out in the corner, just, saying, growth, do whatever you want. We're cash flowing this puppy. But Walmart also needs to beat, right? Walmart has to beat that like Apple has to beat EPS. Microsoft has to beat EPS. Walmart, you need to beat EPS. Revenue, you guys can do whatever you want. We know you're going to rock solid revenue side. You own the world, right? I mean, Tim, how much did we just geek out about Apple hitting the $100 billion mark and Amazon hitting the $100 billion mark and Google hitting the $50 billion mark, right? Walmart did that yesterday. That's Walmart. The revenue side's solid. We all know every consumer shops at Walmart, spends all their money at Walmart, but they got to beat EPS numbers. And they just simply didn't. They came in underneath the expectation. They came in at 139 versus 151. Revenue came in at 152 billion, guys. I mean, they're flush with cash. They're fine there. But you got to beat EPS numbers. And what you got to do if you're going to miss EPS numbers, you got to somehow say the future is going to be better. They didn't say that. They came out with the miss against EPS numbers, and they said the future is going to be flat.
Tyler,
I was enjoying it. It's like a little song
nice,
in my head.
It is a nice tone.
I try to match the way I was talking with the beat. Like,
I was frantically looking for it in the background.
I knew you
couldn't find which screen it was on.
Okay, Tyler, first world problems. You have 6 screens you're looking at. But Walmart here, again, if you're going to miss on EPS, you got to paint a side of the future that's really compelling. If you can't do that, you got to beat on EPS. Walmart missed on both here today. They painted a picture of 2021 where basically best case scenario was flat. That's not good enough, Walmart. And especially on the backs of a miss of 5% on EPS. This is an obvious sell on Walmart. On the earnings numbers, it doesn't mean it's not an automatic buy if we start to see some love at that 200-day moving average though, Tyler. What's your read here technically?
So part of the reason why this gets sold is this has been bid up quite a bit, right, in the last couple of years.
Yeah.
Especially post-pandemic.
Far more than Walmart typically does.
Yeah, so it's almost like it became a growth stock. This did not participate in the crash in March, right? If anything, it was just all higher last year. So it's like, look, they've priced in a bunch here, man. You gotta deliver. I'm a little disappointed. It's just a matter of how much backing and filling are you going to get before they feel like the damage, they've meted enough punishment. So it doesn't look good in the short run, I'll tell you that. I mean, the weekly's starting to look a little bit weak, but this is more of a position trade stock. I don't think anybody doubts it's eventually a buy.
I think it's even I'm not even sure it's a position trade stock. I think it's maybe a park cash and right cover calls and know you're investing in a company that averages 150 billion in revenue quarterly.
Right. Well, and if you want to make the case, just like go look at the long-term chart. I mean, enough said.
I think you need a little bit of a deeper pullback here, quite frankly.
It's certainly not in bargain territory yet. That's for
no,
damn sure.
it's not, and especially when you're talking about the consumer staple stock in Walmart.
Yeah.
Like it's them and everybody else, and this is just consumer staples, right? I mean, Walmart has consumer discretion in it as well, but consumer staples has not been a great component of the market, and Walmart certainly played a role there. So
Yep.
I think something deeper, something. I think is the okay. Let me rephrase, Ty, and then you can go.
Yeah.
I think you need something deeper, or you need more time correction.
Yeah.
One of those two.
Remind me, wasn't the whole Walmart? Didn't they do a Walmart Plus or something? Wasn't part of this the growth story with online and all that jazz?
Yeah, we don't get excited about that until they get 100 million subscribers.
Did they give an update though? Like, is that going well? Is it growing?
No, we don't. Like, I don't know the raw numbers in Walmart Plus yet. No, but okay. I also don't think that's coming until down the road either.
Okay. Yeah. Well, just
that's like an Apple car scenario.
But back on the monthly chart for 1 second, I want to make one real quick point because we talk about management all the time, the need for management, the role of management. Since Walmart's new CEO took over, the stock in the last 6 years, 7 years,
he took over in 14, by the way,
has doubled.
Yeah, he took over in 14.
It's had an incredible trend. It's really, really developed well. So this retracement's happening on the monthly chart, and that short-term weakness in the technicals on the daily chart. I don't think it's not a short-term trade for me personally. I love what they're doing with online. I love what they're doing with Walmart Plus. And part of the EPS miss here was around the fact they're going to have increased cost, and they've had,
what that guy said 7 years ago, Tim? He said, nobody likes shopping at Walmart. So let's create an environment where nobody has to shop at Walmart. And that's the online Walmart. Did a beautiful thing.
They're making good moves.
Is that what he said? Is the owner or is the CEO?
No, that was my interpretation of what the owner said.
I was going to say that's paraphrase, but it was pretty spot on. They've been making moves to get, delivered.
Sorry, they don't build Walmarts. They rehab all the other ones, and they've shifted online. So if that isn't, hey, the shopping experience at Walmart sucks, and we need to improve it. I don't know what else is. Every move they've made is to literally improve the shopping experience at Walmart. Yep. And I think they've done a good job of it, quite frankly.
E-commerce, online pickup, delivery, you name it.
Dude, do you not remember the wild west of shopping at Walmart 15 years ago? Oh man, it has improved exponentially.
I mean, there's all kinds of memes online about people at Walmart, so I'll just say that. I like Walmart. I got no problem with it these days.
We do their grocery delivery every or pickup, grocery pickup.
I'm one of those people.
Listen, Walmart's shift to online has been ridiculously impressive. And that CEO deserves all the credit in the world.
Yep.
Yeah.
Okay. Any other earnings there, brother?
I got a couple. Let's go with Newmont and Barrick Gold here. A little couple mining stocks very quickly. And I'm going to rapid fire these, Ty, and if you see anything technically, just rapid fire it as well. Yeah. I mean, honestly, these are the two big dogs in this space, in the gold mining space, and they basically just replicated each other's report, like copy paste. Let's just get it over with. Newmont comes out with a 10% beat on EPS numbers. Barrick Gold comes out with a 10% beat on EPS numbers. Newmont slightly underneath revenue at 3.4 billion versus 3.7 billion expectation. Barrick Gold slightly above expectation at 3.3 billion versus 3.1 billion. You see how close these are so far, Tim? Revenue increase for Newmont 14% year over year, and revenue increase for Barrick Gold 13.7% year over year. I know they're the same space, but I didn't know they needed to copy paste. Like get different accounts, guys.
Well, look at the charts. The charts are a little copy paste. I'd say Newmont's holding up much better.
Obviously. Yeah, Newmont is holding up a little bit more than Barrick, and again, I don't think there's sixes with the split here. I do think you have clipped a major support level on Barrick, whereas you haven't on Newmont. But again, the difference is 2 days, so I'm not going to make a big deal out about it.
Well, and go back to
Newmont certainly could break that same support level Barrick Gold just did.
Well, and both of them have kind of started this consolidation or the downtrend on Barrick, like you talked about recently, since the August peak in gold. So there's a correlation with gold prices here too. There's nothing that takes you off the long-term fundamentals of these two miners. I mean, they hit revenue numbers, they hit their 2020 projections. They even issued a dividend, So
you don't hate the numbers, and the numbers are not going to get any investor here to be like, I'm out. I can't take the pain any longer. Are you kidding me? Pull up a monthly chart. No, that's not pain. Like they're not going to be doing that. They're celebrating the recovery over the course of the last 18 months still.
Yeah, I agree.
But the raw numbers aren't going to shake you off that. There's just things happening that are much bigger against Newmont and Barrick than the raw numbers speak. But no, the raw numbers are not concerning for me at all.
Yeah.
Those are good. Those are both good reports out of Newmont and Barrick Gold here today.
Mm-hmm.
And then last. I got one last.
One more.
Fiverr, FVRR, please. Look at that monthly chart.
Oh, it's ridiculous.
Diggins out of that one. And the reason I want to bring up Fiverr is bullish retracement, momentum type pattern and trend. Want to get Tyler's technical read here because I kind of like the technical pattern here. Ty, Fiverr comes out 13 cents EPS versus revenue versus 12-cent expectation. Revenue came in at $54 million. No, it's not justifiable fundamentally in any capacity in any history or edition of world history. But it did increase 89.2% year over year. They also increased revenue guidance as well by about 8%, which certainly doesn't justify the 100% rate of return it's had in the previous quarter. But I love the technical setup here, Tyler. Talk me out of it.
I cannot talk you out of it. It is pretty. I mean, you see what's going on elsewhere in the market right now, and this has got to be one of the better setups. And you have earnings out of the way. Look, we just looked at the monthly. It's freaking ridiculous. I have no problem with this trade. I have no problem with this. It's clean.
It's just a matter of how you want to set it up. Let's see if we can get a Tim and Cody. Fiverr, bullish retracement or bull flag. This would be more like a bull flag, kissing up momentum 9, momentum in trend. Obviously, trigger and stop is the eye of the beholder here, but T1 target, 336, T2 target. Honestly, guys, T2 target, if you're legitimately doing this, would be literally in the 425 range. I'm going to be very conservative and just say 350. What do you guys think?
Absolutely. I'm looking at normal step system protocol, put the stop above or the trigger above today's high, stop below the pivot low. You're looking at what, a 3-to-1, maybe even 4-to-1 risk to reward ratio.
And that's at 350.
That's at 350. Even going to, 33.6.
Tim, if I did a Fibonacci extension, I could get at least 12-to-1 reward to risk ratio. Right
Well,
but I love it.
I will tell you though, all joking aside, like 125 pay range is not abnormal here for Fiverr. It's shocking, but it's not. It's what it just did. It moved 70 and then it moved 140. I mean, we're talking somewhere around 100-point range. So. Sure. Dinging 400 by 425 because of the increasing momentum, it would not be shocking. I'm just saying 350.
Mm-hmm. Mm-hmm. There's a couple of things that go into my head. Number one is a good flag setup. There's no question about it. And I love the nature of the tail on the candle today to set up for potential triggers. You can map that out really, really well. It's got huge momentum potential. It's been a juggernaut. When we saw the monthly chart, like Tyler, everybody's like, whoa, look at that thing that it's been flying forever. The options obviously are tricky here. 85% implied volatility. There's no weeklies.
Well, you'd have to spread if you could.
So that makes it tough for a swing.
Well,
trade.
That's fine. Let's hold on. Like, no, don't make it complicated. Just don't mess in a market with 89% volatility if you can't handle the pain. Equity here.
Yeah, I think so. I think it's cleaner, simpler. It would be the way you play it. You can position size according to your risk based on all that. There's a swing setup here for sure. I like this a lot. Yeah.
All right. That's all I had.
All right. If I could take over, I want to give a little sneak peek at the type of picks Tyler's going to have to go up against.
I'm shaking in my chair. Let's see it.
Is that orange or red? I need to know.
It's orange. It's a golfing shirt.
Are you going to go red Nike next Wednesday night?
Maybe I should.
Tiger Woods this red Nike.
Ooh.
Red Nike with some black pants. I
Like,
should
bring the blood, brother.
And Tyler will wear a green jacket because
No,
that's the
yeah, you know,
Oh, all
you know,
right.
here's what it's going to be. He's going to be driving away in his black Escalade, and I'm going to be coming after him with a club, just like that Asian depiction of the downfall. Be whacking the windows.
I was picturing some other event that happened in 2009, but we can talk about that later.
Were you
Go ahead,
thinking
Cody.
Tiger Woods getting beat by his wife?
We don't need
Anyways.
to talk about it publicly. That's old
All right.
stuff. Cody.
All right. Let's start off. I'll start off with Momo.
Oh, Momo.
I got 3 for
Tyler,
you, and I love all of them.
I'm gonna show up and judge next week, and I think Cody just sold me. I love Momo.
Oh, look at this. Nice
love
retracement
me
graph
some
here.
Momo.
I'm not a huge fan of the candle today. Give me a doji tomorrow, an easy trigger above that doji. That thing can move from $18 up to $22. We're looking at $4. Your risk reward on that would be what, 50 cents to make $4. You're looking at an 8-to-1 reward to risk ratio. Easy stop right there at the 200 as well. If it were to come down, that's a nice chart. I like where it is. Price isn't bad either.
Pretty. I support that trade.
You support that trade? All
Yeah,
right,
listen, if there's one of these, I got to choose who goes first as well on Wednesday. So who knows if I steal yours before you get a chance.
Winner gets ball, bro.
That's right.
All right, here's another one for you. Cloudera, however you say it, CLDR. That one's got a doji today off the 9.
Little momentum. Mark's girlfriend kiss off the 9.
I like that one. That one is another.
All right, let's play a short game of would you rather. Would you rather Momo on the what would you say, Ty? Momo more of a bull flag standard retracement?
It's steep enough. I'd call it just a bull retracement.
Just bull retracement.
Mm-hmm.
And we got Cloudera as a momentum 9, right?
Yep.
Ooh. Would you rather?
I can give you a third. Would you rather? A third option for.
Let's make it more confusing.
Let's look at Southwest. A little love in here. Nice little
high.
high.
A little
base.
love, a little high base, kissing off 50 on. Oh, I kind of like that one.
So.
Too. Okay. Do you want to go locked in or would you rather?
Let's play locked in.
I like locked in.
So
all right, so very quickly, we have the high base breakout in Southwest. We have the bull flag rising 9 momentum trigger off Cloudera, and we have the standard retracement in Momo, correct?
Mm-hmm.
Yes.
Okay. All right, I'm locked in.
I'm also locked in. By the way, if you don't know how to play locked in, it's really simple. All of us are going to lock in on one, then we're going to guess what everybody's guessing. So what they locked in on. So I'm locked in as well.
I'm locked in.
I'm
Cody?
locked in.
All right, let's start with Tyler. Tyler, I'll go first. I'm gonna say Tyler loves the potential retracement in Momo. That's what I'm gonna say.
No, I think he likes love there. You know, the
Likes the breakout of
enthusiasm
love.
he drew that high.
Yeah, he doesn't need more things that look exactly like finance and energy. That was my way of convincing him to change his mind, by the way.
Holding up better
I think
against
he
the
likes love.
market, doji pushing resistance. I think he's going to like the
But he's
momentum,
got like
relative
14
strength.
energy plays that look just like this.
Now you're trying to talk him out of it. He's already
Of
locked
course
in. You
I
can't
am.
change your mind, Tyler.
Yeah, I can.
So-
He hasn't made his mind.
Yeah.
I'm going Momo. He likes the retracement of Momo.
All right, Tyler, what say you?
Look, I don't. What you said, Dakota? You said love.
I think
I
you
did.
picked love.
Tim and Cody
Look.
said love.
I'm immune. I'm a 35-year-old. I'm immune to peer pressure. Okay. I picked Momo.
Yeah, of course. All right, I will take my point and go second.
Oh, Matt's got Momo.
I'm locked in.
Matt cheats at these games, by the way. That's,
Yeah, the premise is you got to
I
pick
will
one.
change. No, I can't. I'm locked in. 100%. I'm locked in.
I think he has Momo too. It's dirty, sexy money. That's his baby, and it's a good
Absolutely.
setup.
I'm Momo. All three of
What?
us.
I'm gonna kick my daughter out of my house today.
Nope.
Ain't gonna happen.
Nope.
Momo, baby, I'm loyal. You gotta be loyal.
Yep.
You know, loyalty is like people that aren't loyal. Man, what are we doing? Get them out of here.
Mhm.
No.
Oh, stop it. He's
Yeah.
pouncing on the loyalty because it's working.
I
Let's
know.
revisit it when it's $12.
Hey, I will say though,
hey,
Tim,
I'm
Tim,
loyal until it violates a support level.
I got it.
Right?
it.
No,
they're all three very sexy.
listen. I Dirty Sexy was amazing last year. Amazing last year.
108%
And
on investment.
you know, Momo was my favorite play coming into this year for DSM. And I even said this the day we released it. It might be that it's the little engine that should have ran but just couldn't get going last year, where everybody came home and like, I'm rich, and here's Momo being like, I can't pay my bills. And so maybe there was a little bit of that with Momo, but I'm just cheering on this little engine that's going to take over the world. But no, I like the technical setup in Momo a lot. I like this. Give me a doji in between the rising. If these plays work out, you're not going to get a lot of opportunity from a timing to nail the timing on a doji candle kissing off a 200-day moving average. That could be one of those times. And so, yeah, I like the potential here on Momo.
If you put Fiverr into this group, I would have a much harder decision.
No,
by the way, but we're not doing
but
that.
you can't do that.
Yeah,
That's
not doing
the game,
that.
bro. That's not
Flash
the
me
game.
through the three. I'll go.
So wait a
next.
sec. You all got a point, right?
Yeah.
We all got a point because we all
So
said Momo.
Cody, Tyler, Tim, Matt,
got
all won. Everybody won.
All right. All right.
Tim, you're next.
I am. So Cloudera, you know, obviously you got to love the momentum here. If you draw pay range analysis from pivot to pivot, it is increasing. We've had nice characteristics from that.
It's so sexy. It's unrealistic.
We had a long consolidation that broke it out. Give me Southwest Airlines. Out of all the airlines, I mean, Love is one of those top performers. You know, obviously a lot of sentiment around it. I do believe that if you were going to pick an airline, you could do a lot worse than Love. And that high base is developing here. Momo, you guys have all kind of hit the highlights on it. So, I mean, there's not much to add from a technical perspective. I'm locked in.
I'll start. He's not going to do Momo because he wants to be different. So
He
it's
always
one of the
does.
other two.
That's the only reason to.
I'm going to go with Love.
I'm going to go with Cloudera, given the fact that he teased Fiverr. And
I'm
that's
gonna go
most
Cloudera
like
as well.
Fiverr.
Nope.
Come on, Timmy.
Momo. The whole
Momo.
why in the
Oh.
world? First of all,
He zagged and we knew he zigs.
I mean, think about it.
Oh,
I love the setup. I love the development. I
Okay,
actually have
okay.
been targeting it. Absolutely love it. So
All right, I guess I can
that
lock
goes
it.
against 10 years of playing games with you. You never do that. I'm very confused right now. I don't know how to handle this. Okay,
All right.
Cody, nobody got a point. This is for the win.
Well, I can't guess for myself, so I can't win.
No,
One
no.
of you guys.
Well, it's your game anyway.
Yeah,
So
whatever.
Yeah.
All right, I'm
you're the
locked in.
Wizard of Oz on this one. All right, he's locked in.
is he going to be different?
Dead. I'll go first on this one. And by the way, we're debating three pretty good picks here. Like,
Yeah,
Yeah.
good setups.
like they're pretty good picks, and you can combo two of those picks very easy. I don't know if I would take the Fiverr and Momo trade, but I'd probably pick one. But you could absolutely take the Southwest and pick your poison on the other ones and be fine.
I'm locked in.
He loves the base breakout in Southwest. Oh, but I think he's gonna. I think he sees the opportunity in Momo. That 200-day, combine everything together. It's like heavens and earth. If it works out, you look back. I think he shots in the dark this one. And he takes Momo, but I'm sixes with that in Southwest.
Yeah, Cody, you are locked in, correct?
I'm locked in.
Okay.
Dude, his smile makes me think I'm 100% wrong because he doesn't smirk
He's
like
going
that unless
Cloudera.
he's trying to. Yeah, it's Cloudera.
You watch,
Damn
he's
it.
going Cloudera. He likes the doji. He
Yeah.
likes the fact that he can map out clean risk, simple risk, you know, that little doji right on the 9 moving average. Yeah.
All right, Tyler.
I'll take Cloudera too. You convince me.
It was Cloudera.
Oh,
I've
good
already
job.
mapped and put that trade into the market because
I
it's
like
so easy.
Where you
So
looking
nice
at
and easy to
trigger?
map out. I did
Where do you love that
1852.
18 what?
52.
Oh, right above the high of yesterday, right above the high of the
So
hammer.
well, if we do
Stop
those
loss right underneath the low.
the 10% ATR above today's high above the doji is 8 cents, which pushes us at 51. Yesterday's high was also 51 cents. So I went 1 penny above yesterday's high, and it would be the 10% ATR above today's high.
Yeah.
So I thought it was very easy to go in. Stops very easy, just below 18. I put my stop around 17.93.
I like it.
I got about a $54 risk on 100 shares, targeting up to 20. So we're looking at 3-to-1 trade here. Very simple.
I absolutely love all three of those picks. And Tyler, you better get a little bit more ready for the next week, buddy.
Oh,
Cody's
please.
coming at you.
Cody's
It'll
coming
be
hard.
fine.
Cody's
Yeah.
coming
It'll
at you,
be
bro.
fine.
I think Cody's coming real
You
hard.
better bring that young daughter of yours and maybe
Tugging the
Interrupt the
heartstrings.
a little bit.
Yeah.
Done.
You can't even bring your son, bro. It's got to be the daughter.
You got to kissing babies and all that kind of stuff.
All right,
You
all
know,
right.
I'll let him sit right there with me and let him tell some jokes.
Dude,
Sure.
baby girl versus baby boy. I'm sorry, you lose.
Right.
Yes.
It's just how it works.
Better have another baby in the next week.
I've had 3 girls, 1 boy. It's how it works.
Yep.
So,
All right.
you know what? You guys have been watching Tackle Trading's Halftime Report. I hope you guys have enjoyed your time with us here today. If you have, give us a nice little like and a share and help us get that positive word out of Tackle Trading and everything we do at Tackle Trading. If you've been enjoying this show and you want to test out what we do in our pro member community, you can join Tyler later tonight. If you want to be a part of Cash Flow Condors as well, become a pro member. You can go to you can email team@Tackle Trading. You can talk to our amazing coach Mark over there, and he can get you hooked up. You can go to the website tackletrading.com, get a 15-day free trial, and test out those scouting reports, all of our webinars, and all of our amazing educational content we put out there each and every single day. And until tomorrow, we bid you guys adieu.